Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And I gotta emphasize the unbiased because uh, Tuesday and Wednesday we had some nice bearish moves, very tradable moves in my opinion, bearish setups. And then when it came to Thursday and Friday, how we ended the week, we ended it bullish. So in my opinion, that's a good week where both bears and bulls got to make some money. If you traded biasly and did not trade the setups that didn't lean to your bias. But if you did trade it biasly, despite what the price action was saying, you might not have had a good day and you might have hated last week. But yeah, one thing I can say was the plan was to stay bullish as long as above 410. All right, we recaptured that on Thursday, end of day. Friday, we tested it pre-market as a support. We cleared that resistance level I had at 412.25, which was this gap at back on April 24th. And a very nice move to the upside. Ended the day just below, well, around 416-ish, which also happened to be April 18th high. All right, so I still got this megaphone pattern. Some people might be watching for a double top. Very possible we get a double top. But as I always say, I only trust rejections from resistance when a support fails. So to me, that's confirmation. We finally got that close above 415. Remember, back in mid-April, we had strong selling pressure from that 415 level. And we finally closed above that critical level. All right. So a rejection from April high from around 416-ish. I will trust it if we break down back below 415. Look to short if we break down 415. Look to short if we break down 413.5. That's the support below 415. And then I got 412 and 410. All right. That's when we look to short, when we get false breakouts or we get breakdowns of supports. Okay. So, but if we still hold that 415 level, guys, remember how much selling pressure we had from that level. If we get buying pressure, like we closed above it and we test 415 and we get buying pressure, that's bullish because a strong resistance level has changed to a support level, okay? If we break below 415 and then recapture it, giving us a false breakdown setup, that's bullish. That's when we look to long, all right? So yeah, if we do break 416 or stay above 416, we could fill out this megaphone pattern for Monday. For Monday, that would be, the test would be around 419, okay? 419 is the resistance level of the megaphone pattern. No guarantee it'll test. It's just something I'm tracking. But 419 would be the resistance level. If we clear 416, stay above 416, possibly go test 416. Whereas sellers could step up and maybe go for a rejection. But there's no guaranteed we test that. Okay? Our plan is to react. These are not predictions. They're just to react. All right? We break above 416 or stay above 416. 419 is in play. All right, 418.5 to 419 zone. Give it a zone. If we break below 415, just look to short. Play it level to level. All right, level to level. I will favor a test of the bottom of the megaphone if we break below 410. All right, that's as far as a prediction I can give you guys. Okay, so entering next week, watch that 415 level. Like I said, it was strong selling pressure. We'll see if bulls can treat that level as a support. If it gets treated like a support, we see strong buying pressure from that level at 415. It breaks above 416, that is bullish, all right? If we break below it, that's a false breakout, all right? We got a very tricky week coming up. I don't think volatility is over yet. Maybe Monday and Tuesday we might chop. I hope we don't chop. But Wednesday, we do have FOMC at 2 p.m. And then at 2:30, Powell speak. All right. Watch out for those days. Size down on those days. Why? Because volatility usually increases. So if you're wrong and you use your regular size or you size up, you're gonna possibly lose a lot of money. If you're right, you could possibly win a lot of money, but it's a gamble. Okay, that's why I say size down. So if you're wrong, you don't lose that much money. If you're right, the volatility will help you with your gains, okay? Now, false breakouts and false breakdowns are notorious on FOMC days. Usually at 2 p.m., the market moves in a certain direction, either up or down, obviously. But come 2:30, we get a reversal. All right. So if the market is pumping at 2 p.m., watch out for the false breakout at around 2:30ish or a little after for a reversal. If the market is dropping around 2 p.m., watch out for a reversal a little after or around 2:30 p.m. where it could bounce back up. All right. False breakouts and false breakdowns will be your best friend trading FOMC days. All right. So this is SPY. That's FOMC. We're looking at triple Q here. Triple Q, pretty bullish as well. It managed to defend that 319 level. There's a 319 level right here where they cleared it on Thursday. Friday treated it as a support all day, and it just bounced up end of day. All right. Now I'm going to scroll to the left. There's a gap. I'm looking at a 6-hour chart. There was a gap around 322.5 to 323 zone. Pretty much got filled. All right. But if 323 clears, the next resistance I'm looking at is this yellow line right here. That's a 326.4 level. It's been treated as resistant and as support as resistant. So it's an area of interest to me. If that level clears, the next gap fill is up at 329.2-ish. And then above that, there's another gap around 332.2-ish. All right, so Triple Q got a bunch of gaps, a few gaps that it can fill, but it needs to clear 323 if it wants more upside. Okay, now based on this price action and how it treated the 319 level, I would definitely look to short. Well, first of all, we also close above the critical 321 to 321.5 zone. Look to short below 321, and I will be even more bearish below 319. All right, if those levels fail, 316, 313, and 311 is back in play. Okay, IWM managed to get a close above 174.5 level. All right, one close is not enough. We need to see follow through, so it must stay above 174.5 to be bullish, putting 176.5 to 177 zone in play. Now above, actually 177.2-ish. Above 177.2 would be a breakout of my green trend line here. That will be bullish and put 179.5 to 180 zone in play, okay? With 182.4-ish above that, all right? But the bullishness will stay intact above 174.5 and must clear 177.2 to be bullish and trigger more upside, okay? Breakdown of 174.5, that's when you want to get bearish, because that's a false breakout or a false recapture, and we'll put 172.5 and 170-ish back in play. All right, so stay bullish above 174.5, get bearish below 174.5. Tesla, after recapturing that 50% fib level at 159.7, it managed to give us some type of hammer candle here, showed some follow through and closed, just above that 164 resistant level. Okay, so if it can stay above 164, 166, and 170 is next. Like I said, above 170, we got this big gap all the way up to 180-ish. So above 170, I would favor the gap fill. However, 173.4, 176, and 178 are resistant levels to watch as well. Okay, I will get back to being bearish or shorter term bearish if Tesla can break down 159.7. If we break down 159.7, this little bounce that we had here, that was just a dead cat bounce, and we're possibly going to see lower lows. All right, so stay bullish or short-term bullish above 159.7, switch back to bearish below 159.7. all right, Apple still giving us higher highs and higher lows since January 2023. Since 2023, the year started, Apple continued to give us higher highs and higher lows. We got the latest high Friday. Okay, so next resistance is 170. If it clears 170, get ready for more higher price targets with 173 and 176 in play first. Okay, if you want to get bearish, look to short if 167.5 fail, putting 165.7 in play. That's the purple trend line. But remember, this purple trend line kept Apple up in a bull trend so far all year. So if we break it down, 164.7, break that down, that's when I will look to swing puts and favor a deeper sell-off. Okay? DXY is just chopping here. Not much going on with the dollar. Still needs to break above 101.7 to trigger more upside. And still needs to break down 101.3 as to trigger more downside. Okay? Overall, just chopping. Wow. The VIX. What can we say about the VIX, right? Uncle was bearish on the VIX below 18.5. We broke down that 17 support level and we closed even lower than the 16 support level that I had. You know, that orange trend line was based on a multi-year trend line. Okay, so one breakdown is not enough. I don't know how low the VIX is gonna go, but one breakdown is not enough. If it stays below 15, next support I got is at 14. All right. Excuse me. If it stays below 16, next support I have is at 14. If it recaptures 16, which is a big possibility, if it recaptures 16, that would be pretty bullish. False breakdown. 17, 18.5, and 20 would be back in play. All right, guys. So let's take a look at the dark pool. We had the biggest dark pool order coming in around the 412.43 level for 1.6 billion. Definitely add that to your chart as an area of interest. Okay, an area of lots of activity. Okay. Let me see. Here is the SPY filter 500K premiums or above. Option flow. Oh, okay. Got some interesting plays here. 59% in the puts. This one, 41% in the calls, but this one over 20,000 in size. 418 strike price for May 1st. They may have cashed out on it already. I don't know, but 418 strike price. This is a pretty big size. Interesting. This one's puts for July 21st. Bears should like this one. This one's 5.8 million in premium, over 10,000 in size. Okay, that's pretty aggressive plays. And another put here, 1.3 million premium, over 5,000 size for 385 strike price. So somebody is trying to short the bounce. There are people shorting the bounce, y'all. Are you guys shorting the bounce? Comment below. Are you guys shorting the bounce? QQQ, 98% in the puts. Seeing the block orders still coming in with the big size. This is very out the money. For August 18th, 180 strike price. For puts, 25,000 in size is a block order. Institution. Over 5,000, 320 strike price. Okay, that's all right. This is 315 strike price. Those are sweeps, so more aggressive plays. All right, 315 strike price. Okay, so we're seeing some big bearish plays coming in for next week. Maybe they're preparing for FOMC. 92% in the puts. This is a sweep order that came in end of day. This came in end of day, over 9,000 in size. 167 strike price. That's pretty aggressive. Pretty aggressive here. Sweep order. 170 strike price for May. Very bearish. Big money is very bearish entering next week with FOMC and Apple earnings. Speaking of Apple, look at this. 93% in the puts. This is sweep order over 13,000 in size. They entered around 168.3-ish. 167.5 strike price. You know, the money they put up for this is pretty aggressive. The strike, you know, not very aggressive, but it's still out the money. Okay. Overall bearish. Tesla, 88%. You're still seeing a lot of those block orders for those very in the money puts coming in. So could be a sign of volatility coming in for Tesla. $5, $10, $15 moves. I'm just dreaming, but it's possible. And let's see, end this with the VIX. VIX, 56% in the puts. Pretty split, all split types, contracts, orders, I mean, types. And yeah, some calls, some puts here. mixture. All right, guys, so there you have it. That's Uncle's analysis. I hope you guys found value in this video. I hope you guys were able to make some good money this past week. We had some good volatilities, and I hope you guys were able to trade it unbiasedly, because it was some good moves in both directions. So yeah, if you guys want more content from Uncle or need more help, definitely consider joining my Discord. Other than that, have a good day. Peace.